Hey, welcome back to the Guaranteed Retirement Guy show. I want to talk to you a little bit about retirement income planning and how annuities can help you with it. So, annuities, they're much like pensions. Okay, we have a lot of different income plans for our retirement, and some of us maybe not so much. Maybe you have a nice size amount of Social Security income coming in. Maybe if you're married, you've got both with spousal and your income coming in from Social Security, and that can be substantial at times. But then maybe you have a pension, maybe an old pension from a past company or a current company, and you're able to have that, and that's for life. But there's so many factors to consider. If you were to pass away or your spouse passes away, you know that Social Security is going to be cut in half, because they're going to just pay you guys, one of you, the higher of the two, right? And the same with the pension. A lot of times the pensions are cut in half as well, or sometimes they go away completely. So it just depends on the option that you select when you decide to take that pension payout. Pensions and Social Security, they're all the same. They're all annuities. And what people do when they purchase annuities with their 401k or IRA accounts, they are purchasing pensions. They're purchasing additional streams of income that they cannot outlive. And usually when you will select the joint payout option, now you have guaranteed income that neither you or your spouse can outlive, and the income stays the same no matter who passes away first, which is pretty nice. So I do talk a lot about income planning in my Guaranteed Retirement book. So happy to send you a copy if you'd like a copy of it. Just let me know. But income planning is really important because when you're looking at filling the gaps, maybe, I don't know, let's just say your total income need is $75,000 a year, okay? And you need that to rise with inflation, okay? And let's say that your Social Security payment is $25,000 a year, okay? And then let's say you got another $25,000 coming from a pension. So right now you've got $50,000 of your total $75,000 need taken care of. The problem is you still have that $25,000 need. Now, just to keep things simple, let's also say that your pension has a COLA attached, cost of living increase, where that increases every year with inflation, which is great. And Social Security has been known to also rise with inflation increases as well. So we've got that covered as far as inflation for those two accounts, but maybe not for the annuity. Okay, so for the annuity, we know we need another $25,000 a year in guaranteed income, but we also want to make sure that we can keep that portion as high as possible. Like we want that to rise with inflation, right? Well, there are some annuities that you can purchase that will have an inflation rider where it'll allow it to increase over time. So that'll solve that problem, but not always. A lot of these annuities I look at, they'll have a small increase, but it's not worth it. Like you might have an annuity that's paying you $15,000 a year, and it takes 20 years to get to the $25,000 that you could have taken from day one. Okay. I would say with that, just take the $25,000 and let it ride. But if you're looking to keep pace with inflation on that $25,000 portion, then you might want to purchase maybe 2 or 3 annuities. So what you would do is maybe you have, let's say you got $600,000 to invest. Okay. Just to keep things simple. Maybe you've got $900,000 sitting in your 401k. And maybe we only need $600,000 to really fix the income. In fact, you probably won't even need that much. But let's just say for this example, you need $600,000 to fix the gap. So what you'll do is you'll fund 3 separate annuities at the same time. Okay, and these annuities, they'll give you more income the longer you wait to activate the income. So the first one, of course, you need income right away. You need $75,000 a year. So you activate that annuity, it's giving you $25,000 a year. Okay, so your income's covered, you're good. Let's say 5, 6, 7, 8 years down the road, you're like, inflation's kind of cutting into my income. I need an increase. And so at that point, you'll activate the income from your second annuity, which is significantly higher because you let it defer longer. So that just gives you a bump in income. And in fact, it gives you a much larger bump than your first one. And now you're way beyond inflation and you have a raise in income plus you're above inflation, which is great. Then let's say 7 years down the road, again, you want to activate the third annuity. Or maybe you'll just wait to activate it. Maybe you'll use that third annuity just for long-term care. Maybe you want to wait another 15, 20 years. So if you do need long-term care, you'll be able to activate a really sizable portion of income for yourself that's guaranteed for the rest of your life. So there's a lot that you need to think about when you think about income planning. A lot of times we think about the here and now. We know we need this amount right now, and this is what we need, and it should stay the same for the rest of our lives. But the problem with that is a lot of times we don't think about longevity risk. And when I mean longevity risk, I mean like inflation risk. Inflation goes up over time. And even though we're getting the guaranteed income over time, that guaranteed income is staying usually like this. When inflation is going up like this, a lot of times you need to purchase several annuities. What time you need to do is you need to think about longevity risk. You think about inflation, what it's going to do to the power of your income that's staying the same. And when that happens, you need to think about maybe purchasing extra annuities or extra pensions to be able to take care of the cost, the rising costs that you're going to undoubtedly encounter as you get older. So, anyways, that's what you need to think about when you want to do income planning. You want to make sure you have enough income coming in that no matter what happens, it's going to cover all of your costs, whether it just be keeping pace with inflation, keeping pace with maybe long-term care needs, doesn't matter. So that's what we go over. Income planning is really important to me. And so when you book a call with me, we'll go over that. We'll go over what your needs are, what you have coming in right now or what you will be having come in later. And then at the same time, we're going to look at the gap and then we're going to see how to solve for that. So anyways, happy to chat with you. Happy to answer your questions. Just book a call with me and you'll see the link below and we'll chat about whatever your needs are. We'll see if there's an annuity there that will solve the income gap that you'll likely experience. And it's great to plan for it early rather than later, because at that point, you'll be able to have the income you need. And right now, you'll have a peace of mind knowing that it's going to be covered for the rest of your life. So anyways, I hope that helps. Look forward to chatting with you, answering your questions, and we'll see you soon.